Welcome back to Market on Close. I'm Marley. Kayden here in Chicago alongside Sam Vadas at the New York Stock Exchange. Some final thoughts on the session today. We got retail sales figures this morning coming in flat month over month. They fell short of estimates and sent yields lower, although the markets didn't react too much. Spending during the December holiday shopping season slowed significantly to stay in line with November spending. While economists expected an increase of about 0.4% on an annual basis, sales were up 2.4%. That's a significant tumble from the 3.3% pace we saw in November. This also means that the shopping pace failed to keep up with inflation, as the CPI for December posted a 2.7% increase. We did see those yields fall following the data release, the 10-year dropping more than 5 basis points to 4.14. The 30-year Treasury yield lost 6 basis points, sitting at 4.78. And Paramount has sweetened its hostile takeover bid for Warner Brothers Discovery, adding a quarterly ticking fee worth about 25 cents per share, payable to shareholders for any potential delays in receiving regulatory approval for a merger between the two companies. Paramount also says it will pay the $2.8 billion Netflix breakup fee as it tries to make its $30 all-cash offer more attractive. Now, despite those enhancements, the per-share price has not changed, and Warner Brothers board continues to back a rival merger with Netflix. Paramount also pledged to help Warner Brothers' debt financing costs as it attempts to gain support ahead of a shareholder vote, which is expected by April. All three companies involved here did close higher on the session. Sam, you know I love this saga, and it continues. But what caught your eye today?
And the market delivered for you today, Marley, with that update. Look, software continuing to recover today as well. One of the big movers was Datadog after its earnings beat there. Software really needed some good news, and Datadog seemed to have delivered. The company makes its money from selling analytics platforms to companies like AWS and OpenAI, and its 29% revenue rise was driven by customer migration to AI, which is a good news story for the sector, which has been beaten down on the thinking that AI is eating its lunch. We had a great conversation earlier, and doing their jobs faster and cheaper. But then we saw some more potential disruption with an AI tool for creating tax strategies, unnerving the market and prompting a sell-off in wealth managers on the thinking that their business models could be vulnerable here. Now, just moving on, Western Digital was one of our worst performers today, our hardest hit among the memory names. Not clear exactly what the real catalyst was here. There are some competition concerns in HBM4 after reports Samsung is going to mass production. But on the same day, Western Digital got a price target boost from BFA on more conviction around these companies' ability to meet their targets. So these losses, you could say, Marley, are just a drop in the bucket in the scheme of things, given the run-up that we have seen in some of these stocks. But heading into tomorrow, what are you going to be looking out for?
I'll be looking for the jobs report. Our delayed January jobs report will be coming in the morning. The economy likely added about 55,000 jobs in January. That would be up from the 50,000 we saw in December. The unemployment rate widely expected to remain at 4.4%. Now, similar to recent months, job gains are expected to be concentrated in healthcare, with careers in other fields becoming harder to find as employers remain in this low hire, low fire mode. We do have one potential red flag going into the report, though. We saw fewer job openings in December than at any other time since 2020. Job openings usually a leading indicator of future job growth. So something to look out for there, Sam. But what will you be watching for?
Yeah, well, we've covered a couple of these throughout the course of the program. Obviously, we're going to be watching the reaction to Ford, but we've also got a couple of names to note. Shopify, which, as KG pointed out, is going to be a really interesting report. We're also going to be hearing from McDonald's. Want to be hearing about, what they're thinking about as far as the value-hungry consumer. And then, of course, on the macro side, I'm going to be looking out for that Chinese inflation. This is a really important indicator as far as, how things are going there in the domestic economy. This has been at a 3-year or so high, so watching out for that because that is very important as far as the Chinese domestic economic story is moving forward. Marley?
Yeah, of course. Also getting McDonald's, Cisco, AppLovin tomorrow. So lots of names to look out for, but that is going to do it for us today on Market on Close.